How's it going, everybody? It is Brandon here with Bybit from the YouTube team. And today's live stream, I'd like to welcome everybody to Trading Mindset. We're going to talk about the emotions of trading and everything that goes into strategic trading. Hopefully, it will be able to help you out on your trading journey throughout the rest of 2022. It's been quite a turbulent past couple months, really, for just about everything crypto, including those crypto prices. So I know if anybody out there is currently working on their strategy or just working on active trading in general, I really hope that this stream will help everybody out. But to get started, if anybody out there in the comments would like to share their current time zones, I'm pretty curious where you guys are located, where you're from, and what time it is where you are. I'm currently in Austin, Texas, and it's right around 11 a.m. starting out. I know all around the world it's probably pretty late for a few of you guys and girls, but we're going to get started with this trading mindset presentation in probably about 5 minutes, just to give some time for people to introduce themselves, for me to introduce myself, and for people to kind of join in. All right, so we got India, 10:27 p.m. Thank you for joining nice and late. Still Friday in India, right? Yeah, so it's a nice Friday morning for me. If it's morning for y'all, then go ahead and grab a cup of coffee because we are beginning right now. These live streams will be coming out pretty much every single week, every Friday at just about the same time. So go ahead and throw that in your calendar. Taiwan, 50 a.m., or that's 12:50 a.m. Non-military time. Thank you guys for joining from all around the world. Let's go ahead and get started in just about 2 minutes with this trading mindset presentation. I'm going to bring it up so you guys can see just about what we're going to be looking on. But just to give you guys a little bit of a schedule for this presentation and for this live stream, it's going to be about an hour long. So feel free to stick around for the whole thing or stick around for maybe half of it if that's all you want to look at. But we're going to be going through this presentation, and at the end, we're going to go through some live examples of a few trading strategies, or really my favorite trading strategy that I use for active trading. It's called the trend following strategy, if you've heard of it. But we're going to really get into that towards the end of the presentation. It honestly won't take too long, so we should have time for plenty of chart requests and just looking at charts and looking at coin prices at the moment. So we got Germany at, 6 p.m., 1800 hours, evening here for Jack Reacher. Oh, Jack Reacher in the chat. I didn't know that guy was still alive. But let's go ahead and get started with this little presentation. I call it Trading Mindset. We're really just going to go through the emotions of trading and trading strategy, what really makes a good trader long-term and a profitable trader long-term. Because at the end of the day, we all want to make those big trades. We all want to be successful with our trading journeys. But if we can't, in the very long term, have positive percentages and net positive gains, what's the point? It is exciting, but we want to have those good gains and those good percentage numbers long term, because that's kind of the whole point of trading, isn't it? All right, so we got Korea, AM, 2 a.m. Oh, man, pretty late for you. But let's go ahead and jump straight into this. My name is Brandon Zayat. I am part of the YouTube content team for Bybit. You can check out the Bybit Crypto Beat series on YouTube as well. But let's go ahead and get started. This is going to be super quick for the background, just so I can introduce myself. You guys can introduce yourselves as well. What is your background in crypto? Do you have a non-crypto related background? You're just getting started? Are you an active trader? I love to hear all of that during this little section. So I actually got started in e-commerce probably like as a teenager or in my early 20s. And then from there, I jumped into Bitcoin. So I put Bitcoin and crypto trading here, but it really is a pretty big separation between Bitcoin and crypto trading. So I got started with Bitcoin in probably 2014 on a few forums in which you could actually, so I would act as a middleman to buy and sell Bitcoin, or between Bitcoin, PayPal, and something that was called Liberty Reserve, which some people would consider as one of the earliest digital currencies. Check out Liberty Reserve on Google if you'd like to learn more about that, or maybe in the future I'll do a presentation about early digital currencies, early cryptocurrencies. It's really, we're going to have a wide scope for these live streams. So a lot of the time I will be covering trading because that is my specialty and what I spend like 18 hours of the day, or used to spend 18 hours of the day doing. I've kind of started to fall back to doing other stuff as well now, just because it's so stressful. But you really have to manage that time, and we'll get into that as well. So I got started in Bitcoin, buying and selling Bitcoin on forums right around 2014. If you guys have heard of Second Life, I would buy or I would take PayPal. I would buy SLL, which is like the Second Life currency. I would trade that on an exchange called a very early exchange called Verwox. This is like Mt. Gox era. And then you go from Verwox, or you go from SLL, or the Second Life Lindens, to Bitcoin. And then I would take those Bitcoin over to people on the forums, sell them for a slight premium, like 15-20% versus PayPal, repeat, wash, etc. And then I got into crypto trading right around 2016 to the beginning of 2017, kind of before, like just before all the big boom happened, or the big hype, the big boom happened. Just before all that big hype started to roll in as Bitcoin kind of went up, 10, 20x. But got started as an amateur trader right around 2016 and just tried to absorb as much information as possible. And since I have been trading full time since then, or until about 3 months ago, trading full time. So probably, what is that, 6 years? Yeah, that sounds right. 6 years of trading full time. I hopefully have amassed a pretty decent strategy that's working for me, and some knowledge that I can share with you guys as well. That's what it's all about, is just learning what everybody else is doing in terms of trading and seeing if that will work for you, seeing if you can learn from it. I got started on YouTube, making a crypto YouTube channel and crypto Twitter. You can find me on Oracle of Crypto. It's mostly trading stuff, kind of slightly advanced, kind of detailed. But if you're into it, if you're an advanced trader or a swing trader, anything like that, you can check that out as well. Don't post there too often. Same with crypto Twitter. And then Bybit YouTube and Crypto B. This is what I'm really excited about, what I've been doing for the past 2 months. I've spent 2 months in New York City with my guys, Andre and Greg. If you've checked out or seen the Bybit Crypto Beat series yet, awesome. Go ahead and check out the rest of the episodes. Those are coming out every Monday. If you haven't seen it, there's a playlist you can subscribe to on YouTube. But there's the background. If anybody else wants to share their background in trading, I love to hear it from anybody in here. Very quick disclaimer. Obviously, we have to do this. Pretty much anytime you talk about crypto, presentation should not be interpreted as financial advice or an investment recommendation. Although we're not really going to be talking about specific trades or specific coins. Everything's going to be an example, or everything's going to be educational. So we don't really have to worry about that. Obviously, trade and invest at your own risk. If you're already trading, you understand that there is risk and you have to bear that. So we're going to jump straight into the daily trading process. So first, I'm going to talk about the standard process. This is going to be really just the day-to-day of trading crypto. So what does it look like when you wake up? What does it look like throughout the day? Can you really manage that time with a full-time job or doing things, being a student, full-time student? Pretty much how much time does it take to manage your crypto trading from a strategic standpoint? I'm going to share the standard process. That's something, anybody can use. And I'm going to share my process. It's a little bit different. It just kind of depends on the day. So the standard process is in the AM, you check your charts and you pick positions. So most people will go on TradingView or Coinigy or any of your favorite exchanges, look through their favorited pairs. You can just click star and favorite your favorite pairs. I always like to recommend choosing maybe 5 to 10 pairs and just running through those every single day, because the more familiar you are with a specific pair, the more you look at that chart, the better you're going to become at trading that specific pair, because there are hundreds, there are really thousands if you go into the smaller exchanges, but between hundreds and thousands of pairs that you can trade, really coins, and then pairs beyond that, tens of thousands. So there's just so many options for what specific pairs you want to trade. I will like to say just real quick, if there's any terms that somebody doesn't really get a grasp on, so if I say pairs and you don't really get that, just drop a comment and I'll explain it immediately. But there are tons of pairs, and you kind of have to pick a few to look through every single day, because nobody has time to look through 500 pairs every single day. And the more familiar you are with a specific chart, the better you're going to be at kind of instantly reading and understanding if this is a good time to enter or exit. So in the AM, most people will check their charts and pick a position, maybe write it down, and then you enter and log that position. So anytime I say log positions, log means to write down your trade in a trading notebook. I do everything in a physical notebook. I just feel like that helps me, and it's the easiest. I write everything down physically anyways, but if you throw it in an Excel spreadsheet, in a Word document, that works as well. But one of the most important things you can do as a trader is write everything down, document everything. I'll really get into this as we get towards the end of the process, but just write down every single little thing about the trade that you can. So that means starting with why you're actually entering the trade. So a lot of people, whenever they enter a trade, they say, all right, this looks good, like it feels good, I'm going to buy, and I'm going to go for a long side trade. but they don't really understand, or they even forget, 7 days down the road, they forget why exactly they entered that trade. And the best thing about writing everything down is if you write down why you entered the trade, 7 days or 14 days down the road, you come back, you look at that and you say, okay, this trade didn't really work out. Now, why did I enter it? Okay, so maybe that's not a good idea to enter trades based on that reasoning. And then you can kind of manipulate that in the future. And then at night, if you want, you can check the charts and pick positions or more positions, enter and log positions. So the same thing as you do in the morning, you can do at night, you can do throughout the day. It's a very simple process in terms of just the standard trader. You look for positions, you pick a position, you make your entry, and then you write everything down. For myself, it's only slightly different. It's just a little bit more active in terms of the days whenever I was active trading. Now my process looks a little bit closer to the standard process just because I don't really have time to look through charts all day, every day. But I will, in the AM, check price alerts, trade notifications, and my favorite pairs. So just a little bit more specific in terms of what I do, but it really all follows along and stands with that standard process. And then set alerts for new positions. I'll get into alerts in just a moment. PM, check the charts, search pairs outside of the favorites list. So let's say I have 20 favorites, or really it's like 50, but really between 5 and 15 that I'll check like throughout the day. Go outside that favorites list, see if there's any other positions, any other coins that look really good. And then finally, throughout the day, enter new positions when alerts go off. So I make all of my positions or enter all of my positions based on alerts that come through my phone. You can also do that with your laptop or your computer, basically just understanding or getting notified whenever the price crosses a certain level or a candlestick closes above or below a certain level. It's all integral to the trend following strategy, and I'll get to that in just a moment. And then log new positions every time you enter. So as soon as I enter the trade, I log, and I'll get to this in the next slide. Let's go straight to it. And this will all make sense now. So the trade outline, or what I like to call the trade outline or the position outline, this is basically everything you write down and everything you need to know and determine before you even enter the trade. So a lot of people, they'll take a look at the chart and they'll say, all right, this looks pretty good. I'm going to enter this trade. But then they go, should I sell at plus 15% or plus 20%? I'll just figure it out whenever the price goes up that much. And they don't set a stop loss, or they do set a stop loss, but they exited early. So writing everything down and deciding where you're going to buy, where you're going to sell, and where you're going to set your stop loss, what percentage you're going to sell at each sell target, selling 100% at that stop loss. Determine all of that before you even enter the trade, or within like 2 minutes of entering the trade. Otherwise, you're going to find yourself in a very bad cycle of habits. So the 3 major components, like I just said, are the entry price, your sell targets, and the stop loss price. So obviously you want to enter at a certain level. You want to set your sell target for a long side trade above that level, and a stop loss just a little bit below that entry price, depending on your strategy. And then I go ahead and set alerts. So like I said before, you set alerts for certain price levels whenever a coin, let's say Bitcoin, moves down to below 40,000. So you set an alert at 39,999. And then you get an alert on your phone to say, all right, now that we're below 40,000, might be a good idea to enter a short side trade, or maybe just a good idea to keep an eye on that chart for the next couple hours, maybe as we wait for that candlestick to close. So you set alerts on your chart. You can do that on TradingView. I'll show that real quick just in case people haven't done that before. So let's move over to TradingView and I'll show how to set a simple alert. So let's say, all right, we're at 40,800 exactly, and we want to set an alert if the price goes below 40,000 to maybe enter a short side trade, depending on your strategy. So you can go ahead and there's just this little plus button down here that'll show up. So right below 40,000, if we can get it just below there, 39981, that's good enough for me. You add an alert, and as soon as it crosses below that level, you'll get a notification on your computer. You can also change it to where you get a sound notification as well. So let's get back to this presentation. Next, we have the order of operations for a trade. Also, if I'm talking too fast, if I'm just running through things way too quick, please let me know. I know it's probably late for some of you guys, and it's hard to really, to understand all this information whenever I'm talking so fast. So I can definitely slow down at any point. The order of operations, I like to determine my entry, sell targets, and stop loss price. So I'll show that on the chart in just a moment, what that looks like. And then you set alerts for those sell targets and stop losses. So you enter your trade. You say, I'm either going to buy a spot which would just be buying Bitcoin, or if you're trading with options, a put or a call, at this price level, say 40,000 for Bitcoin, and you're opening up a short side trade. We travel just below, 40,000, just a couple dollars below. You say, all right, this is the perfect time. We're going to move lower. Let's open up a short side trade. Now you want to set alerts such that whenever we move down below and hit a price near your sell target, so let's say you open up your short side trade at, right below 40,000, you want to set your sell target at 38,000 for just a couple percentage points towards the short side. You could be trading with some low leverage or trading spot. That's fine. Not every trade has to be, plus 50%. That's something that crypto traders it gives crypto trading a bad rap of, everything's this extreme trade, when really, if you make, 50, or not even 50, if you make 20 plus 4% trades in a month, then you're beating the market, and you're beating probably most traders, crypto traders as well. But you usually see the outliers on social media. That's how it always works. So you want to set an alert such that if the price moves down and hits that level, you get an alert on your phone and you say, all right, it's time to sell. You also want to go ahead and set that stop loss price, or set that stop loss order, such that it is always ready to be executed. This means that, and it really goes into risk and reward, and we'll get into that in a moment as well. Maybe I should have reordered this presentation just a little bit, but let me just get through this. So you determine your entry, your sell targets, and your stop loss price. You set alerts such that when the price reaches your sell targets or your stop loss, then so it doesn't just happen and it flies right by you, but you see it on your phone, you see it on your laptop, and you say, all right, my trade is either done and it got stopped out, or it's done and it worked out, and you hit that sell target, profit. So next you want to enter your position. So after you've determined all of these levels, remember, do it before you enter your position, determine those levels, set your alerts, then you enter your position, and then you set your stop loss. So as soon as you enter that position, the very next thing you should do before you take another sip of coffee, before you turn on Netflix, go ahead and set that stop loss such that you pretty much maximize the maximum possible amount. There's no more than whatever your stop loss is set at that you can possibly lose on that position. So if you set your stop loss at negative 2.5%, you never have to worry about, if you're in a long side trade, you never have to worry about the price just knifing down to, minus 50%. You check your charts the next day, you check your trades, and I'm down 50%. And it's just that wave that goes through your body of just dread, of just, why did I do that? Why didn't I set a stop loss? So always set that stop loss just within seconds of opening up that position. That way, no matter what happens, something crazy happens in the market, something crazy happens to Bitcoin, Ethereum, whatever your altcoin or your pair is, you will maximize the absolute maximum possible. How do I say that? You will limit the absolute maximum that you can lose on that trade. And balancing that maximum you can lose and the possibility of what you can gain all goes into risk reward, and eventually goes into longevity of profitability, or profitability in the long term. Well, again, we'll get into that. And then finally, log your position. Make sure to write everything down, document everything. There are even some exchanges out there that do a really good job. Bybit do a really good job of logging all of your stuff. But even then, you're not really going to be going back into your order book and saying, all right, this is what my trade's looking like. And you can't really add notes. So just writing everything down by hand, putting everything in an Excel spreadsheet is really the best bet. What is this comment? Do you think ExoChart's footprint is worth the money? I'm not sure what that is. Can you tell me what that is? Encounter 85. I always struggle with when to exit my trade. Tell me about it, man. I've been struggling with that for 6 years. How's it going, Ati Lawrence? How's it going? Thank you, everybody, for joining the stream a little bit later. So now we're going to get into risk and reward. And yet again, if anybody's joined the stream late and they want me to do touch on a couple things that I just said before, just let me know and I'll do a very quick run through. So now we're going to run through risk versus reward. This is a very standard theory for trading, technical analysis. You always want to make sure that whatever you are risking, or whatever you always want to make sure whatever your possible reward is for your trade outweighs the possible risk. So imagine, here's the best way I can explain it. So imagine you're making 100 trades throughout the year, and you have a 50-50 shot of either succeeding and hitting your sell target, or failing and hitting your stop loss. So you just have this random strategy. It works out half the time. It doesn't work out the other half of the time. What you want to make sure you do is set risk reward ratios such that the reward for those trades that succeed outweigh the loss from those trades that hit your stop losses and that fail. And if that works out, even if you're at 50-50, 50% of your trades work out, 50% of your trades don't, throughout those 100 trades, throughout a month, throughout a year, you will have net profit. So as long as your risk reward ratio is positive and is a good level, you can make completely random trades as long as it's 50-50, and you will still have net profit in the end. Now, obviously, you want to maximize those risk reward ratios, maximize your percentage of trades that work out. You know, if you can get up to 70% of your trades working out, that is ideal. Anybody that's making trades that are hitting like 95% of them work out, that's just, I don't think that's even possible. Or you're setting very short sell targets, but I'm getting into semantics. So risk reward ratios are calculated as your sell target percentage minus or divided by your stop loss percentage. I'm going to show this on the chart real quick. So there's actually one nice little tool you can use on TradingView, and we're actually just going to use the same example. So let's pull up a short position from $40,000, like right through here. And let's say your sell target is maybe right through here, just above this previous little breakout area through here. That's how I like to make my trades. And your stop loss is, we don't really have any good price action to set one through here, but let's say your stop loss is at 1.28%. That looks pretty decent to me. So this is going to go ahead, this little tool, you go on the left-hand side of the TradingView, prediction and measurement tools, and you click on either long position or short position. It's actually automatically going to calculate what your risk reward ratio is. So you don't need to go through a calculator or anything or do it by hand. So here we have it open. I can bring this to the middle real quick, and it's going to show us your risk reward ratio right through here. It's going to show us the maximum that you can lose if you set your stop loss at this top side level. So at 40,558, just for an example, the maximum you can lose on this trade is 1.28%. And then what you're looking to gain, or the maximum you can gain, is right around 3.58%. And you're looking at a risk reward ratio of 2.8. So anytime you're opening up a position and you're setting your stop loss and you're setting your sell targets, you can use this to automatically calculate. And even if you're looking to maybe move it a little bit higher, you're like, I don't think we're going to move that low. You can actually just bring this up and it's going to continue to calculate. And you're going to say, all right, 2.26 as a risk reward ratio. That's still fine with me. So let's go ahead and go back to that presentation real quick for my next note, which would be that the amount you risk in comparison to the amount of possible reward will determine if the strategy can survive in the long term. So that's kind of what I've been saying, or I said with the example at the beginning. Having that proper risk reward ratio is really what's going to determine, in conjunction with your successful trade percentage, so what's going to determine if you're going to be profitable in the long term. So always keep your risk reward ratio in mind before you even enter the trade. So as we're going through that process of setting your sell targets, setting your stop loss, make sure you're calculating and, ensuring that whatever you can possibly gain outweighs whatever you could possibly lose for every single trade. So next, risk reward ratio does not need to be a particular number. So it doesn't need to be 2.5 every time. It doesn't need to be 3 every time. I wouldn't make a strategy where my risk reward ratio needs to be a certain number, because it's always going to change depending on the pair and the chart you're looking at. So it just needs to be high enough to justify that successful trade percentage. So, numbers move up on this side, and then numbers are going to have to move up on this side. Imagine, the seesaw. That's just varying ratios. If you're just getting started trading, don't worry about this right now. Just worry about having a decent risk reward ratio. And for that, I like to say anywhere between 1.5 and 4. So I can show that on the chart one time real quick. Go ahead and take a look at that. So risk reward ratio, and actually let's do a long side trade real quick, because that usually makes more sense. I know at the top of my head, that always makes more sense. Just an example, let's say you set your stop loss through here, and your sell target through here, 5.72%, maximum possible profit on the long side. Maximum possible loss for your stop loss set at right around 40,291. You're looking at a risk reward ratio of 4.01. So just keep these numbers in mind, and just like over time, you gain that understanding of, all right, if we have a stop loss set at like 1.4%, 1.5%, and we want a risk reward ratio of 4, let's go ahead and set that target at 5 to 6%. So that it doesn't need to be perfect is basically what I'm saying. It doesn't need to be 4, it doesn't need to be 1.5, but anything below 1.5, and usually it lowers your long-term profit percentage. So if you've got and requires a higher win-loss ratio. So basically, if you're like lowering the amount that you could possibly gain versus the amount you're risking, so you could possibly gain maybe 3%, and your stop loss is set at -2%, then you're going to have to make sure you're very successful and you have a good win-loss percentage in order to maintain long-term profitability. Anything above 4, so let's say you set your stop loss at like -1% and you set your sell target at +4%, that sell target isn't going to hit as often in terms of before we hit that stop loss. So it's really, yet again, it's a seesaw. It's just balancing odds. And we'll get into that whenever I start showing some examples. But I know that was pretty detailed and probably pretty boring. So let's go ahead and get into the emotions, because this is my favorite part, and the part that I don't think enough people touch on. A lot of people touch on the charts, and I know I touch on the charts a lot as well in my personal channel. But touching on the emotions is just so vital. Sub Gaming, how's it going? Welcome to the stream. Welcome everybody that has joined late. So I like to say for me that trading is 80% emotion and 20% strategy, or really 20% strategy, charts, and experience. So 80% emotion versus 20% strategy. How does that make sense? Well, it makes sense to me because emotions can cause so many bad things, so many wrong turns, so many mistakes to happen. So how do you manage those actual emotions? Well, first, what can happen? What can cause, based on your emotions, what can cause a trade to fail? So you can exit a trade prematurely. You can enter a trade that doesn't align with your particular strategy, or you can set a stop loss or sell at a loss before your stop loss hits. So it all comes down to, in terms of managing your emotions, in my opinion, you can just have, if you want one good liner, stick with your trade position, stick with your trade strategy. So because you're writing down in your notebook, you're going, all right, so I'm going to enter at $1. I'm going to exit at, set that sell target at $1.25. And I'm going to set that stop loss at $0.9. I've got a risk reward ratio of this. And then why am I entering my trade? Here's why I'm entering my trade: because the moving average looks good, because we've confirmed, and the support and resistance flip, we're above that level, we've closed, we've confirmed, blah, 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 whatever your strategy entails. You write all that down, and you're entering the trade for a reason. And you're setting your sell targets at a certain level for a reason. You're setting your stop loss at a certain level for a reason. And if you don't have a reason for doing all of this, then you're guessing or you're gambling. So you got to make sure that you're strategically setting those levels. But you write all that down and you say, I have good reasons, I have a good strategy, and if I don't stick with it, then the reasons are wrong. Basically, if you don't stick with your trade, then there's no reason for you to write down all the reasoning, and there's no way of going back and understanding why your trade failed. So if you spend a lot of the time, or a large percentage of your trades, you end up exiting early, moving your stop losses, moving your sell targets, then you will never actually know if your trading strategy works out in the long term, because you're manipulating it in the middle of the trade. So the only way to confirm, get real data on if your long-term trading strategy is working, is to let those trades run their course. So even if the price is moving down, it's going to hit your stop loss, let it hit the stop loss. If we're moving up and we just nearly don't hit, between a couple percentage points, don't hit that sell target, and it comes back down, then hits the stop loss, let that happen. Because in the future, what you can do is you say, all right, it looks like I set that sell target a little too high. Maybe I should reduce my risk reward ratio. Or it looks like I set that stop loss a little bit too high, a little bit too low, depending on what happens. By going back to your journal, going back to your records, what you should change about your strategy and how you can manipulate it to make it more successful in the long term. Please let me know if that makes sense. So a common solution, like I just said, is completely ignore your trade until your alerts have been hit and your trade is complete, which removes motion almost entirely. So I always like to say I do like always to say, and I've been saying this to Andre and Greg, the New York City apartment, especially Greg. He's a wild trader. Stick with your trade. and don't touch it. Don't even look at the charts. Look at the charts as infrequently as you have to once you've actually opened up a trade. I only really look at those charts that I've entered a trade for once I get the alert on my phone. That way I'm never tempted to exit early or manipulate that trade before it has completed. So next, I make my entry and don't touch it until the sell target or stop loss hits. Exactly. Once the strategy is proven, emotions become the main point of failure. So if you're perfect on your emotions and you never manipulate your trades, you can really nail down if your strategy is profitable in the long term or not. Otherwise, if you are manipulating your trades early, you're never going to know if your strategy actually works. And it's all about nailing down a strategy, because that's what removes all of that stress from trading. The less you're looking at your charts, the better you are about sticking to your strategy and letting your trades run their course, the less you're going to be worrying and checking the charts all day. Because I will say, I'm not sure how many people in here have been trading, long term. What really takes a toll is all of the stress that comes with trading and checking the charts all day and not being able to think about anything else because you're worried that your stop loss is going to hit or your sell target's not going to hit. You don't even have to worry about that as long as you have good risk reward ratios, you follow your trades, and you just let your strategy run its course. So next, slide number 8, removing bias. Let's see how many we have left. Just a few left, and then we're going to get into that chart analysis. So go ahead and start dropping those requests for chart analysis in the comments, and I'll go ahead and take a look at those in maybe 5 or 10 minutes once we get through these last couple slides. So removing bias. This is yet another tough one. I have been guilty of this many a times, and probably the first 2 years of my crypto trading journey. Like probably most people, I'd like to say most people, I don't want to assume, most people are biased towards the long side for crypto. Have you guys noticed that as well? A lot of people are saying, only goes up. Crypto only goes up. These coins only go up. And people don't really realize that you can make money on the short side as well. You can make a lot of money on the short side, a lot of money on the long side. So if you can remove that bias and just say like, I don't mind if, Bitcoin goes up 10%. I don't mind if it goes down 10%, because either way, my strategy would allow me to make 9 or 10% on that trade. And you can still have the belief that Bitcoin and Ethereum or whatever your favorite altcoin is, any coins, you can still have that belief and that, kind of support in the project and the technology in the long term, while at the same time shorting that coin. All you're doing, like, unless you have hundreds of thousands or hundreds of millions of dollars, you're not going to affect the market that much. You're not going to dump the coin. As long as you're trading a large market cap coin, you can trade on the short side as well and not say, oh, I'm no longer supporting Bitcoin. I'm no longer supporting Ethereum. So I like to aim as close as possible to 50-50 short long bias. Every now and then I do swing towards the long side or the short side. If we're in a big bull run, I'm like, we should look for some long side trades because those are most likely going to work out. That's just how it goes. Same with the short side. If we're in a big bear run, all right, maybe we'll look for some more short side trades, but as close to 50-50 as possible, that's going to be the best. So there are still many traders that exclusively trade the long or short side with net profit. There are a few guys that are pretty notorious on crypto Twitter for being like huge short side traders or huge long side traders. The downside to this, obviously, is that there's going to be extended periods of time in which you're not going to be able to make many trades because you're only looking for the short side. You're only looking for breakdowns. You're only looking for the long side. You're only looking for breakouts. And that's just going to limit the scope of how many trades and limit the amount of how many trades you can actually make. So finally, whenever I'm biased towards one side of the trade, I do find myself looking for things that aren't really there. So if you're looking at the charts and you're looking at 50 charts and you say, all right, I need a coin that's going to go up. I need a long. I need a spot long, or I need a leverage long. Either way, coin's got to go up. You don't think about the possibility of that coin actually going down and the profit you can make from that coin confirming down and making a nice short side trade. So if you're as unbiased as possible, there's just more opportunity out there, and you're going to find yourself a little bit more successful in the long term. One more slide. I know this is getting long-winded. The trend following strategy. I'm not going to go through everything on this one, but just understand this is like the basis of my trading strategy that I've been developing for the past probably 4 years in terms of actually developing a strategy and sticking to it. It's called Turtle Trading. It's based on a guy named Richard Dennis who set up this whole experiment. Basically, he thought that he could teach any person, any decently smart person, any person like understands how to use computers. He thought he could teach any person how to be a successful trader just by following these like 6 or 7 simple rules. And it actually worked out to an extreme degree. He took an ad out in a newspaper and he said, "Would you like to be a turtle trader?" And then he had like 5 questions, true or false. And then people applied or people called in and they said, they answered the questions, and he picked, a team of 20 students, and he taught the strategy to them over the period of a few weeks. And then he let them fly with a certain amount of money. And they were, triple digit profit percentages from people that didn't have trading strategies, that weren't traders at all. So basically what he tried to explain and what we learned from that is it's all about the strategy. And because he tested it over time and he said, this works out, if somebody can follow that strategy to a T every single point, just go through the order of operations, then anybody can be profitable. It's all about sticking to it. So just a very quick run through, and this is an excerpt from The Complete Turtle Trader. It's actually a book by Michael Covell. I don't think Richard Dennis ever wrote a book. He just had kind of documentation about his strategy, but this guy really ran through kind of a complete outline. So looking at prices rather than information from television or newspaper commentators to make your trading decisions, that's basically just being a technical trader rather than a fundamental trader, and not letting news or anything like that influence your technical trades or influence your strategy. Have some flexibility in setting the parameters for your buy and sell signals, test different parameters for different markets. Again, that's just becoming familiar with your specific coin. There are certain coins that have nice little trading ranges that go up 10% every single time, up 10%, down 10%, up 10%, down percent. And then you move over to another chart and they've got a nice trading range, but it's like 1.5%. So just become familiar with your favorite charts, your favorite pairs, and understand that you're not going to be able to set the exact same parameters for every single chart and every single pair. Plan your exit as you plan your entry. So this is what I talked about at the beginning. Write down everything before you even enter that position, and then know when it's best to, or know when you will take profits and cut losses. So determine your sell targets and determine your sell targets and your stop loss before you even enter that trade. So just confirming that. Use the average true range or the ATR indicator. You guys can check that out and play with it. I don't personally use it, but it does give you a good idea in terms of average volatility. To calculate volatility and use this to vary your position size. Basically, measure the volatility, use the little measuring tool on your charts, and determine, all right, for this trading range or for this move, on average, we move up 5% rather than 15%. It's really just getting like a good general understanding of how much we could possibly move based on our previous price movement. Finally, don't ever risk more than 2% of your account on a single trade. I'd say this is probably, whenever he's saying this, he's probably referring to leverage trading. Most traders, there are a few books I've read that just run through like dozens of interviews with legendary commodities traders, stock traders, bond traders from the 80s all the way to 2020. And I think the average in terms of like let's say you have $1,000, the average risk amount for each trade was between 5 and 10%. But if you're trading with leverage, if you're trading, margin, futures, anything like that, anything where you're trading or you're borrowing money to trade more than you actually own, you're going to want to make sure that that's a lot lower so you don't get liquidated. Finally, if you ever want to make big returns, you need to get comfortable with large drawdowns, and that's all about following the trend. And we'll get into that. I'll show you guys on the chart in just a moment. Is using the RSI, a quick little question from Splash Fire Films. I can actually pull this up. Is using the RSI for entering a trade a good indicator? Yes, but you never want to use it by itself. So from a technical standpoint, an RSI, because it's a lagging indicator, you always want to use it in conjunction with other indicators and other confirmations. So you can use an RSI and a moving average and price action or horizontal support and resistance flips and a confirmation. You can use those 3 things to be sure about a trade, but if you just use that RSI, it's not going to work out very well. So you want to make sure that you're using your RSI to confirm your other indicators and your price movement and price action. So hopefully that helps. So there's the trend following strategy. Let's get through this. Let's do some chart analysis. I'm going to show you guys what the trend following strategy looks like. on the chart, how you can set it up. And if you guys would like to use it as a strategy in the future, maybe you guys can update me and see how it works out. Maybe do some paper trading first, see how it works out, and you guys can update me next week's live stream. So let's do some examples and requests. If anybody has requests for a chart for a pair that I could use or show how the trend following strategy works, how it looks on the chart, go ahead and drop that down below. And then I'm going to do a walkthrough of the trend following trade outline. We'll do some Q&A, really not much. And I'm just going to talk about crypto beat for the last couple minutes. So let's go ahead and move straight over to the chart. And I can I'll just start going through coins for the trend following strategy. And if I see any requests, then we'll move over to those. So let's pull this information off. Let's go ahead and cancel this little alert. So we're on Bitcoin right now. First, I'm just going to show what the trend following strategy looks like, and then we'll actually find a good chart that it might work on. But let's just use an example real quick. So this looks like we are in a bear trend for the short to intermediate term, at least for the past couple days. So the first thing you want to do is make sure you're following the trend, hence the name, the trend following strategy. But what we need is a confirmation based on horizontal support and resistance flips. So what does that mean? What does any of these random things that Brandon is saying mean? Basically, we set a good level based on pattern recognition is really what it is. But we look for horizontal support and resistance. We say, all right, this area through here, we're going to make this yellow for support. This area through here, we've seen lots of bumps up against it. We saw these topside shadows kind of approach that level, or actually hit that level. Topside shadows approach that level. We come up, we don't see any topside closes above that level. This looks like a good support because we haven't been able to really push through it. And once we did push through it, it's now going to flip, or it was a resistance. Once we do push through it, it's now going to flip into a support. So we come down, and let's say we come down to this level at like 39,542. All right, it may hold, it may not. But what happens is if it doesn't hold and we see us push down further, so we go lower than that level, we see a nice maybe 4-hour candlestick close below that level. Now we're starting to say, all right, we're probably going to move down lower because we weren't able to hold that support. So now the trend is confirmed in the downside direction or the short side direction. So now that we've closed below this level, we should see a push down a little bit further. So maybe to there. So it's really all about waiting for a confirmation that a trend has been confirmed. And in order to confirm those trends, we use horizontal support and resistance levels. Basically, you set a straight horizontal line on your chart and you look at how many bumps up against that level we've seen so far. Have we been able to push up above that level? And really, once you throw it on the chart, throw horizontal support and resistance on the chart like this, and you just move up the chart, you say, all right, this is all lining up. Like this is probably a pretty solid support or a pretty solid resistance. And one thing to note is anytime we move, let's say a level is acting as a resistance, once we push through that resistance, we come up, let's say we come back down, that same level is now going to act as a proper support. So you can use that for your trend following strategy. So this is our trade setup. We say, all right, we've determined our entry. If we can see a nice price movement or a nice candlestick close on the 4-hour chart below this level, we're going to open up a short side trade. Now, where do we want to set our sell target? That's the next step to make, or the next step to take. So we go ahead and look through our horizontal price action. We look for a good area with good alignments, maybe through here. I would probably set it between here and up here. You could even set 2 sell targets. That's what I do probably 40 to 50% of the time. Just an example, let's say you set your sell target through here. We have your blue for your entry and your red for your first sell target. And now you want to set that stop loss. So let's say you set it, again, just an example. This isn't really working out as a trade. But if we move up above this level, I'm going to set that as purple for your stop loss. Now we have determined our sell target, our entry, and our stop loss. We're going to go ahead and open up our short position indicator, our little measuring tool. And we're going to bring this down to our sell target. That's right around 2.29%. We're going to bring this down to our stop loss area, and that's 1.39%, and it's automatically going to calculate that 1.65. So that's our risk reward ratio. And remember, anything below 1.5, not really worth it. You have to make too many trades. Anything above 4, and you're most likely going to hit your stop loss more than your sell targets to a pretty extreme degree. So here is our trade setup, full trade setup for the trend following strategy. Now a risk reward ratio of 1.65, maybe that's a little bit too low for you. Let's go ahead and bring this down. You decide, all right, we're going to bring this down a little bit lower to this breakout area, maybe just above that bottom side shadow. You bring this down, you say, all right, we're a little bit better. Risk reward ratio of 2.54. That looks pretty good to me. So that's the basic outline of the trend following strategy. We can do some more examples. Go ahead and I want to get a good scalping strategy. I wish I had a good scalping strategy. If anybody has any chart requests, yet again, as long as they're in the top like 500 market cap, or as long as they're on Bybit, and I can check them out on TradingView, I will take a look at them. So if you guys have any recommendations, go ahead and send them now, because the stream is wrapping up, and I want to make sure to get in everybody's requests before the stream closes out. So there's our short side trade example. We can do a quick long side trade example. That would be pretty fun. We could do it on Ether. So we've got a nice little setup for Ethereum right now, actually, kind of bouncing down and holding that level. Let's see what these closes do. The monthly closes on Bitcoin have actually been great. If you're feeling bad about Bitcoin or bad about Ethereum and your charts, always zoom out to the weekly and then the monthly and even the 3-month, and you'll get a whole new perspective. So zooming out as far as possible. You know, a lot of people don't like to analyze the monthly or the 3-month, but it just gives you a good indication as to what's been happening really over the past couple of years. All right, so let's go ahead and set up a long side trade example because it's just so much more intuitive. Long side trades, short side trades, it probably took me 3 full years. I don't think I made a single short side trade until after 3 years of trading. And even then, I was still biased towards the long side. So let's say we move back up. We're currently at 26.87. We move back up just above maybe this previous high through here. We see a nice candlestick close, and we move above 27.56. We're like, all right, all of this aligns pretty well with our previous price action. We've got some good confirmations. If you guys want to look into horizontal support and resistance flips in regard to the trend following strategy, that's probably one of the most vital things that I'm not going to talk about in this video, is looking for confirmations like we see through here, touch through there, we come down, another confirmation. You always need at least 3 confirmations to set a horizontal support or resistance flip. Once you find those confirmations, you're like, all right, this is a good level. All right, we're going to move higher, or if we move higher, we're going to open up a long side trade, maybe just above there to allow for a little bit of confirmation. So between 27.51 and 27.64, we move a little bit higher than that. We see a close above this level, and we're going to open up that long side trade. So we found a good area for entering our position. Next, we want to look for a good area for exiting our position and gaining some profit or setting those sell targets. So we look at our next areas of horizontal support and resistance. This area through here is just, it's too close. You'd have to be trading with some pretty high leverage, which we can't in the US, but still risky overall. You'd have to be, the potential profit is too low compared to the potential risk. So we move up a little bit higher and we say, all right, maybe this area through here, maybe this area through here, maybe a little bit lower than that area, a little bit below those closes. And I like that, just through there. Some good alignments. And that's going to be our first resistance and our first sell target. Now we need to determine that stop loss area. So we move back below our entry position. And let's say, I would actually probably set it just below here where these closes are on the 4-hour, just below there, just to beat out those other traders that are also setting their stop loss at that same level. Another thing I can probably get into next week is about setting proper entry and sell targets, or entry positions, entry targets and sell targets, and beating out other traders. There's just a couple tips I have that I like to share with you guys. So let me know if you'd be interested. So now we have our trade set up. It's a little bit risky. We probably have a pretty big risk reward ratio. So we might want to bring down the sell target, but we're going to measure it first. We're going to make sure we have long position set. And what we're kind of the reasoning for our trade, because remember, we want to write that down every time we enter a trade. The reasoning is that once we move above this level, we make a new high based on these. I can zoom in. We make a new high based on these top side shadows through here. Once we do that and we've confirmed above an area that has really acted as a support and resistance flip over time for the short to intermediate term ever since February 21st. So for weeks and weeks, this same area has been acting as a very nice support and resistance flip. It's an inflection area, basically. And if we can move back above that, then we have the highest probability of continuing the trend in the long side, or in the long side direction. So that's our reasoning for the trade. We write that down in our notebook. We say, all right, our stop loss is at 1.23% or 27.27. Write that down. Our entry is at 27.61. Write that down. Our sell target is at 28.95. Write that down. Your risk reward ratio, 3.93. Write that down. And now we have our full trade. You've written everything down. You wrote down your reasoning, your explanation for why you're personally entering the trade, why it aligns with your strategy. And then you enter your position. So you click buy or open up a leverage trade. But if you're just trading with spot, you buy your Ethereum. Once it closes above that level, or once we see price movement above 27.61, and as soon as you buy, you go ahead and enter that stop loss, which is a limit trade. What is it? Stop loss, stop sell. You enter your stop loss. The terminology is, I've been talking too fast for too long. You set your stop loss at 27.27. You set an alert at 27.27, and for your sell target at 28.93. And then you leave your trade alone. The next things that could happen. So if you ignore your trade and you only depend on your notifications, there are two things that could happen. Either your stop loss hits and you're alerted on your phone, or your sell target, the price rises to your sell target level and you're alerted on your phone. You go in, you cancel out your stop loss, you sell at that sell target level, and you have a successful trade. And you always make sure that risk reward ratio is within those proper ranges, such that you can have 10 trades in a row. And if 7 of them fail and 3 of them succeed, you're still net profit. So hopefully that was a pretty decent example. Anybody else? FTM, there's a request. Jakina Crack. We're going to take a quick look at FTM. I probably have time for 1-2 requests. So take his example or her example and go ahead and throw those requests in the chat. We're going to take a quick look at FTM, and we're going to do it quicker than we did those Bitcoin and Ethereum charts, because those were examples. I was walking through everything. We can actually run a little bit quicker. I'm actually going to make this bigger so you all can see. Let's go ahead and take a look at FTM. Where's FTM? I can actually just search it because none of my favorites are in order. FTM on Bybit. There it is. And let's go ahead and reset our price scale. This is what we're looking at right now. Man, everything's just looking just like Bitcoin or Ethereum. So the first thing I'm going to do, and I'm actually just going to do a full run through of this chart and kind of the steps I take. The first thing I'm going to do is zoom out as far as possible and look at the longest term trends, because another note that I can throw in a video next week and really get into is like something very vital to trading that a lot of my trader friends, or just a lot of people that jump in trading, don't really think is important or don't really understand. It's not really presented to them as an important fact, is that your longest term trends, so your longest term trends, maybe like a year-long trend, what's happening in that trend. So let's say it's a breakdown. So like through here, it's a bear trend. Anything that happens in that trend or in that time frame is going to supersede, or basically be more important than, your shorter term trends. So always look at the longest term trend first, and then start to narrow things down. So maybe go from the weekly chart down to the daily chart, down to the 4 hour, down to the 1 hour. And then you can determine, all right, maybe something looks good on the 1 hour. Maybe we should long, but then you zoom out to the 4 hour or the daily, and you see we're actually looking for, or we're about to see a reversal, or we're actually already confirmed on those longer term trends, a downtrend. And then you say, all right, let's move it back to the 1 hour chart. Do we have a chance to actually make that long side trade, or should we just wait out because we've already confirmed for the long-term trend? So that was just an explanation for why I zoomed out so far. So FTM, this is the 4 hour chart, FTM to US dollar tether. And let's go ahead and look at what we're looking at for confirmation towards the downside. is what I immediately go towards, just because we've already seen this big breakdown, although we should see a nice little bounce, maybe a slight bounce up towards the long side. Basically, we haven't confirmed either way, and this is going to be most charts you look at when following the trend following strategy. It's a lot of waiting around because we haven't yet confirmed, like we're seeing on this chart through here, and I can throw those levels on the chart that we're looking at for confirmations. So this is what I would personally do. Again, not financial advice, but just looking at the chart where to set support and resistance and confirmations. Standard technical analysis. There's your bottom side support and there's your long side resistance. Do I like that? Yes, I like that. Maybe move that a little bit higher. Yeah, I'd like that a little bit higher for the actual confirmation. And there's your kind of range of what we're looking for. So I would only open up a short side trade if we broke down below 1.708. And I'd only open up a long side trade if we broke out above 1.809 for this time frame, for the 4-hour time frame. So obviously there could be a long side trade you can open up that we've already confirmed for if you move into the 15-minute time frame. But for the 4-hour time frame, we've got to wait. And we don't see any confirmation for the short to intermediate term trend just yet, because that's what we're looking at the moment. So I would need to see a nice close below these levels because that's where we saw kind of our breakout resistance through here. And then we come down, we come up. I can zoom in real quick. Like basically, why am I choosing these levels? We see a breakout through here. Once we saw that top side confirmation and a new close above that level, we move up to the top side of this range. We see resistance near that level. We come back down and we see that very same level that previously acted as a resistance, now acting as a support. Actually zoom that a lot so that y'all can really see that. So it's acting as a resistance through here. This yellow line, it moves above and it now flips from a resistance to a support now that we're coming back down. Hopefully that makes good and plenty sense. So what we're looking for is a nice close below that level, maybe slightly below. Again, we're trying to beat out those traders and also avoid any type of what's called a false breakout, false breakdown, or a whipsaw. So just avoiding like slight little price movements that look like they're going to confirm the trend, but don't actually. So you allow for a little bit of margin below that level or below your confirmation level, such that you're confirmed fully and you have a less chance of that false breakout, false breakdown. So that's what we're looking at for the short side for a nice confirmation. Maybe even set it. No, I like that level. Then you go ahead and set some nice sell targets below that level, but there's not a lot of immediate sell targets. You could actually probably stretch that down and make this a little bit more of an intermediate term trade. So I would actually probably set it just above this level, not getting down to these confirmations through here, or these supports through here. So this acted as a resistance, and once we come back down, it's going to act as a support. I'd move up. I'd be a little bit more conservative personally, just above these closes through here. And there's your first sell target. You can set laddered sell targets all the time for any trade. What this allows you to do is be wrong a little bit more of the time, which is always helpful. If your trade strategy allows you to be wrong just 5% more of the time, that's going to help out many-fold in the long term. So basically what you'd say is, all right, we see this confirmation towards the downside. We open up our trade maybe through here, 1.69, 1.696. We open up that trade towards the short side and we get an alert at 1.63. And we say, all right, we're going to sell 60% of the overall position at here. And if it moves lower, then we're going to sell the other 40%. But if it comes down a little bit further, but it doesn't quite hit that same level, you can go ahead and set a stop sell at that same sell target, such that you end up selling 100% at your first sell target. Hopefully that makes sense yet again. So back towards the stop loss side, we would go ahead and look at all of our previous price action, move this a little bit higher, and also keep in mind what that ratio is going to be for your risk reward. So we're going to move this just a little bit above all of these previous top side closes and these previous areas of resistance above this shadow through here. And that's a pretty decent area. You might want to move that up a little bit higher. But again, we're going to measure that short side risk reward ratio such that your entry is there. Your first sell target is there. My mouth just popped. And then your stop loss is through here. And we can actually zoom this in. And it's a risk reward ratio of 2.12. Looks good to me. So you've got your first sell target at 3.73%. Your only stop loss at 1.76%, which results in a risk reward of 2.12 For FTM, towards the short side, towards the long side, again, you use the same process, but let's see if there's any other requests before I look at the long side. Oh, awesome. You checked it out. So there's the short side for FTM. I think that's going to be the last chart. I ran a little bit long this time. Maybe next week, I'm going to cut down the presentation to like 20 minutes, just a couple quick lessons, a couple quick tips. And then at the end, or really the bulk of the stream, will be looking at charts and answering questions just like this. So finally, if anybody has any questions about the live stream, about Crypto Beat, about trading, about my trading experience or history, go ahead and throw them in right now. I'm going to stick around for 5 more minutes and just talk crypto, what I've been looking at for the past 2 months, which has really been the guys I've been working with at Bybit on the YouTube content team. We make it a series called Crypto Beat. It's my favorite series in crypto YouTube, but that might be a little bit subjective. Basically what we do is we pick a subject each week and we just dive right in. So we've got one guy, his name is Andre. He is a stand-up comedian from Portugal, and he probably knows the least about crypto from the 3 of us. We've got another guy who is a former actor, now director and editor for the team. His name is Greg, and he's always behind the camera, but he still pretty much does everything with us in terms of producing the series. And we take these weekly dives into, if you haven't seen the series yet, the first episode was just an intro. Second episode was what can you buy with Bitcoin in New York City? So this really applies to any city in the world. Like, I'm really curious for the cities you guys live in, for Pakistan, for Algeria, what could you actually go out and buy with Bitcoin or with any cryptocurrency? Here in Austin, sharing my experience, there are a lot of vendors, and even in Dallas, my hometown, there are a lot of vendors that actually accept Bitcoin. And I was surprised that there are more in Texas than there are in New York City, because New York City has so many people. But I guess Austin's a little bit more techie. Same with Dallas, maybe. There's more people that are setting up Bitcoin ATMs, that are setting up places that will actually accept Bitcoin, the partnerships with PayPal and Square, all of that coming up. I think we're going to see a lot more places that will actually accept Bitcoin and cryptocurrencies, and crypto debit cards are pretty big now. I know there's wait lists for most of the exchanges that are offering them. There's been a lot of stories going back to Monaco. MCO is an old token that actually was probably the first, either one of the first, or actually the first projects that released a crypto debit card that you can spend crypto on, or crypto with, like at any retailer. And this was in 2017. So there actually hasn't been a ton of development since then, or maybe just not a lot of people are using them. But I know that's why a lot of these exchanges and a lot of these credit debit card crypto companies are offering pretty high rewards. So like percentage rewards for spending crypto. Next, we got into NFTs. Probably my favorite episode. We had a lot of fun with that one and really produced a good story. Next, we got into Metaverse. Got some VR goggles, some Oculus. I don't know if you guys have ever jumped into Decentraland. You actually don't need the VR goggles to jump into Decentraland, but we did it with the Oculus Quests, and it was a blast. Playing some of those games, trying to figure out how to like premiere or like take a YouTube video. And we had to go to a theater and like enter the link by using the pointer and like clicking HTTP://. It was bizarre. And there are a lot of like little kids in there. So it seems like we're probably a little bit far from Metaverse becoming fully mainstream, even with what Facebook's doing. Again, any final questions? I'm going to be ending the stream in about a couple minutes. Again, we will be releasing these every Friday at right around the same time. So if you guys have any questions in advance and you'd just like to comment them down below for the final video, once it's released, there will be a VOD, or like a full video recording of this stream that will go up on YouTube. So if you missed it, or if you came in late and you want to see the earlier parts, you'll be able to check that out after the stream ends. But that's about all I have. You guys can check out Crypto Beat. It comes out every Monday at 5 a.m. Eastern time or 6 p.m. Singapore time. or somewhere in between if you live anywhere else but New York or Singapore. But it comes out on Mondays, and you can click a notification to see when those videos will come out. We're having a lot of fun with them, and we do have some crazy stuff in store. We've done a lot of interviews with industry professionals, people that are actually using, this is like what we had for our trailer, was people actually using crypto in their day-to-day lives. But that's really what we're doing, is we're talking to people that are either full-time crypto or are accepting crypto in their businesses, and kind of either amateurs or just hobbyists of crypto. We're basically talking to anybody who does who's interacting with crypto, and in each episode we take a dive into another little segment of crypto. So I believe, spoiler alert, next week we're going to jump into stable coins. Exciting, I know, but I think there's going to be a lot we're going to learn that we didn't know before, because I've never really been one to research stable coins, because you can't trade them. As a trader, you can't trade stable coins. So if anybody tells you to invest in US dollar tether or US dollar coin, the price isn't going to go up. But you guys knew that already. Finally, I'd like to thank you guys for watching. This has been Brandon with Bybit YouTube team. Check out Crypto Beat every single Monday. You can follow us on TikTok. We post some TikToks too, some fun stuff on Instagram. You can check all of that out via the links below in the description. But finally, thank you guys for watching. I hope you guys have an excellent Friday, or even Saturday if it's early morning. Thank you, Splash Fire Films, for checking this out. Again, any comments down below, like, I wish you had explained this more in detail, or I wish you hadn't gone as deep into this subject because it's all flying way over my head. Can you do something a little bit more simple next time? Just let me know, and I will definitely check out those comments throughout this weekend. So thank you guys again for watching the stream. Have a fantastic Friday and a fantastic weekend.